So it's crazy because in August, as you point out, how many days 1% moves. It's thin, and there's a vacuum in some other areas of the news cycle. So a lot has been happening. Is it noise, or can we derive something from the future action that we're expecting?
No, I don't think it's noise at all. I mean, it's 19 straight days that the futures have
1%,
plus or minus 1% pre-market. So there's a lot of volatility there in thin markets. I think it's real, actionable news. I mean, the thing I worry about is when you start adding up the tariffs in aggregate, we're now just about over the top of the total fiscal stimulus for all of 2019. So we had about $125 billion worth of fiscal stimulus in 2019. The tariffs are about $110 billion right now. So we're going to basically zero out fiscal stimulus.
Well, what if you take in how much the yuan has gone down, though? And I mean, that hasn't hit us directly. The 120, it's not apples to apples.
Well, it is apples to apples in the sense it's fiscal stimulus. It's not to China. If their yuan's going down, that's insulating their exposure.
And consumers haven't felt.
The consumer has not yet.
They hasn't lost the 100 and whatever you just said. You haven't subtracted that stimulus from the economy.
Well, it is in the economy, right? The economy is made up of government spending, business spending, consumer spending. So the consumers remain robust. But I guess your case. What you're saying now is that the tariffs have actually canceled out the benefits of tax reform. You think for 2019? For 2019, yeah. So even if we get to a deal or a trade truce or something, without rolling back those tariffs at some point, they're going to be there in 2020. They're going to be there until we keep moving forward. So I think the concern is as the rhetoric escalates, right? We've crossed a number of kind of red lines and thresholds. First, it was the currency with the yuan. Now we're going to tariff the consumers. We've already talked about a tech conversation. Last week, the president alluded to he may sacrifice an economic recession for national security. And now we're beginning to start having conversations about directing companies to stop doing business in countries, right? We're crossing red lines all the way across here. They're going to make it very hard to walk back when it's all said and done.
Kathryn, Darrell sounds kind of bearish. What do you think? Do you think the tariffs are having this much of an effect?
Oh, I'll take the completely other side of that. That's what makes TV fun and a debate interesting. So the fact is that a trade war is not showing up in real economic data in the United States. The U.S. is doing pretty well. If you look at import prices, in fact, let's look at the numbers, right? Import prices are declining. They're not even rising because of these tariffs that we've had for many months. We're 25% on 40% of imports for what, 6 to 9 months, and you have import prices declining and core PCE decelerating from 1.9% in December to 1.4% currently. The U.S. consumer confidence is still extremely high, and you have not seen the flow through to inflation. In fact, if you really think about it, and this is something, Joe, that I encounter quite a bit with our clients and a lot of people that I talk with, people have the impression that when you increase an import tariff, then the equivalent impact of that import tariff is what you're paying at Walmart. That's not the case. Approximately 20% of what we consume in this country is imported, of which approximately 20% is from China. So the numbers are pretty easy to do. The impact on the additive, ceteris paribus, which we know not everything is always equal, but the net impact on core PCE over a period of time of 1 year, Joe, is 0.9% on 25% of total tariffs. So the impact we haven't even seen in inflation, and it's not a direct impact on U.S. GDP. The U.S. economy is a consumption-based economy. The export or trade is 10% of our GDP. China, it's far more relevant. It's about a third of GDP. So certainly I'll agree with you. I think incentives are aligned, and I do think that we get to some framework terms by end of next year.